Welcome to Simplified Profits. With over 23 years of experience in the stock market, I'm Anthony Calhoun. Just make sure you subscribe, turn on your notifications, and leave some feedback. This is our weekly update where we will look at the weekly, daily, hourly, and monthly charts on major ETFs, also the Mag 7. Thoughts on the market and scan for some buying opportunities. You don't want to miss that, so stick around to the end. And let's dig in, starting with SMH, ladies and gentlemen. Now, SMH is the semiconductor ETF. We keep our chart nice and clean. We got the stochastics, the 200-day moving average, and the 50-day moving average, some Bollinger Bands, and your candlesticks. But the last time we got an SMH, which we really got an SOXL, which is the leverage version of that, we entered right here when it hit oversold, ladies and gentlemen. Now, we did exit when it started looking weak here. Missed out on a run, but we don't look back and get upset. We locked in 13% profit in 7 days, which is a great swing trade. And now we are waiting for it to pull back. It hit the overbought condition, and just the other day, I want to say Thursday, might have been Friday, basically said watch out on the top. Hourly chart and daily chart was looking weak, gassed out. Posted that on Stock Twits. If you don't follow me there, make sure you do. And it did pull back. Now, what will happen next week? Only time will tell. But just looking at the market, ladies and gentlemen, the market swings. If you're not taking advantage of these swings in the market, you're missing out on a lot of opportunity. And really, I don't look at the charts as much as I look at the stochastics, right? I'm looking for oversold opportunities. That's my buying condition. A bullish stock chart. Now, the ETF can be swinging sideways. That's fine with me. But it really needs to be trending up somewhat, and it needs to be above the 200-day moving average. If it's under the 200-day moving average, we are out. But we are looking at SMH. Look at the weekly. So the hourly, we might get a bounce come Monday. Especially, I think there was some news that hit Reuters about government subsidies for chips. Why don't we do some government subsidies for some health food? Anyway, these companies are some of them making good money. And we may see a good bounce on Monday just on the hourly chart on that news, but I stick to swing trading the daily charts. Could take a couple weeks, could take a month or two for this to pull back in the oversold territory. But that's what I'm patiently waiting for. We're going to do another video later. If you ain't paying attention to the transparent account, check it out. There's a channel on that. And we're sitting mostly cash, besides a couple long-term ETFs. Weekly chart, as you can see, I mean, this thing has really broke out, which we said back here, if this thing, it might have been right here when it was either going to set a triple top. We called the pullback here months ago. Said the weekly chart will bounce like it did. And this right here, which we stated, it looks strong. And if it broke out, it'd see 180 pretty quick and then possibly 200. I don't know if we'll hit 200. We hit 196. Check our previous videos. It did follow that breakout pretty strong. But it's up there, ladies and gentlemen. I mean, I definitely wouldn't be going all in. Be cautious. We like being cautious with our money. Monthly chart broke out. I mean, it's just a monster right now. Semiconductors are. But regardless, I don't buy breakouts. Used to trade breakouts a long time ago, but you're getting more false breakouts than you do real breakouts. Now, every ETF you can see will probably be seeing the same thing. The charts are going to look pretty similar on triple Qs. It's just a technology sector. Does hold like some, let's say, healthcare stocks, stuff like that. But I would be expecting the same exact thing on these. The hourly charts, weekly charts, all look identical. Not as big of a breakout as the semiconductors, but it's still heading there. And then when we get into DIA, you can see, honestly, on the daily, I can tell you what, I was hoping this thing would just trade sideways all year. and swing from the bottom Bollinger Band to the top on UDOW. And man, that'd be just a good year. Some real quick swing trades. It probably won't. It looks like it could actually break up. Now, last year, it moved the least amount of, as the other ETFs. SMH, I think, did like 70%. Triple Qs did 50. SPY did 20. And Dow Jones did 10. So we could see a little breakout in Dow Jones. It's maybe due for it. Now, here, if you're like me, just looking around at the economy, the state of the country, the state of the world, you would think the stock market would be more closer to lows than highs. But this is where we're at. It's just companies keeping a good balance sheet, whether they got to lay off employees or what. But hey, eventually it'll all come around. Regardless, the market's going to swing. I'm going to stick to my strategy, follow my rules, and compound profits. Now, SPY, last entry we did was right here, really. It didn't, and I even posted. This is not my normal strategy, but we entered Quad X, which I've been waiting to enter because it's a 4X leverage ETF on S&P 500, SPY 500, excuse me, ladies and gentlemen. And I did that because it looked like it was going to break out. As Bollinger Bands got tight, it was either going to consolidate and keep a low range, low swing down, and just keep consolidating on that Bollinger Band, like I was talking about Dow Jones. But good possibility it broke out, and well, it bounced up and would break out, and it did. Now here we locked in profit about 8.5% on that position, and the strength, prefer to sell strength, buy weakness, and we'll be waiting for that to pull back as well to enter that trade again. But I mean, we called a buy here, every oversold territory, besides when it dropped under the 200 day. That's when we would have been in semiconductors because, and ladies and gentlemen, pull your stock charts up, pull up the US stocks, and go from A to Z, and just look at your 200-day moving average. Your biggest drops happen two areas: when it's overbought and when it's under the 200-day moving average. Okay, those are the best times to not be in a stock. Okay, unless you're just holding for the long term, and then you're just going to add on every pullback, unless it crosses under the 200-day. Now, the chart on that looks pretty similar to the rest of them. These ETFs usually trade in pretty similar patterns. Now, semiconductors is hotter than the rest, so definitely moved a lot more. And that is the ETFs, ladies and gentlemen. So we are waiting for a pullback. Only time will tell which one we enter first. If I could trade UDOW all year long, 2.5%, but on UDOW, and we're talking days at a time. So you got a 6% swing. If every 12 days I could lock in 6% on you, if basically it swung, if every week it swung up and down the Bollinger Bands and you just tapped into UDOW and just locking in that profit, those are the best times, ladies and gentlemen. But we will probably be watching SPY's pullback for Quad X and SMH's pullback for SOXL. May not happen next week. The market may continue to rally next week, ladies and gentlemen. I'm not I can't look into the future. I just know how the market swings, and that's what I'm looking to take advantage on. Now let's look at Microsoft. If you didn't check out our last Mag 7 video, check it out, because everything we were looking at and followed through. Microsoft broke out. This company has just been a monster. Man. And, I would expect that to pull back too. Even Microsoft pulls back, ladies and gentlemen. Nothing goes straight up. It swings up. All right. There's going to be times where it may just swing down to the bottom, may just swing to the Bollinger, or not the bottom Bollinger Band, but the 20-day moving average, which is in the middle of the Bollinger Band. Okay, it may just walk right up that back and forth from the top Bollinger Band to the 20. I've traded stocks like that many times before. Just kind of sell when it starts pulling back and grab it again at the 20 and rinse and repeat. But sometimes they will break down and hit the oversold. You just got to know how to manage your position and what to watch for. Now, Apple, crush it. We said we would definitely watch this top right here. Looks like that could be forming a good top, and it's creeping up on the 200-day moving average. So we could see Apple. It wouldn't be nothing I would enter right now, mainly because there's a lot of resistance, it looks like, at that $197 range. And if it breaks under the 200-day moving average on its next pullback, that would have me getting out, because I don't hold anything under the 200-day moving average, ladies and gentlemen. If the stock can't hold the 200-day moving average, I don't want to hold it in my portfolio. I don't even want to trade it. So just be cautious on this next pullback, breaking under the 200-day, and you'll see what I'm talking about when we drop down to Tesla. Nvidia, same thing. Said that baby would break out. It's been consolidating for some time since its last gap up, and it broke out. I mean, people were buying this and just holding the shares. I mean, we're buying it for the long term. I mean, that's what happens. People just consolidate, gobble up the shares, and it'll break out. But like always, it'll pull back even after the gap up. I mean, heck, it took a while to hit the oversold position, but that's where I buy. That's where my strategy I'm very confident in, knowing it'll do me well. And then if it keeps going down, I just manage the position, keep my average lower. Meta has been just, since it crossed over the 200-day, that would have been the time to sell. So, and would have saved you 50%, ladies and gentlemen. So if you've been in this for the long haul, if you would have just followed that one rule to get out when it dropped under the 200-day moving average, by the time it crossed back over it, you would have saved yourself a 50% loss and then been able to ride it back up. So it's been a monster since it's crossed over. But it may do a 20-day moving average walk. So maybe, because it looks pretty monstrous. You see that 20-day moving average got bought up. It dropped right there, got bought up quickly. And it may drop back down to the 20, and that may be your trading range. Google broke out, like we were saying. I mean, that's just, is that new highs for Google? Yeah, looks like it. Like Google's hit new highs with a lot of others. Tesla. These are what we said on the last video we did. I just want to cancel, delete some of these. It's probably going to delete them all. No. But we said on Tesla when we did our Mag 7 video, watch out. The highs are getting lower, lows are getting lower, and it's creeping up on that 200-day moving average. Even did a video back here at one point when somebody asked me if they should buy it, and I said I wouldn't buy it based on how it's trending, and that 200-day moving average coming in range, and then it dropped there, crossed under, crept back up, but it's back down under the 200. And when we did the video, it was right around this area, and it would have saved you 23% loss just staying out of that. We want bullish charts, ladies and gentlemen. Any of the other Mag 7s, basically, maybe besides Apple. And here is Amazon. I mean, when it crossed over the 200-day moving average, once again, it's been a monster. It's had a couple drop-offs. So, oversold. Don't like buying on a stock. I'm okay with an ETF after it got oversold. Just for the print, or after the gap down, just because it usually carries. But if you would have waited a little bit, gobbled up some, I would have definitely waited for another swing. But it looks like it's on the right pace, trending up, trending sideways and up. How far will it pull back to the oversold position? I don't know, but we were saying in one of our recent probably a couple weeks back video to buying opportunity there. Maybe just pull back into the 20. You got to just keep an eye on it. It's definitely a strong stock right now. Still has ways to climb before it hits highs like everything else. Now here, of course, economy is going to have a huge effect on Amazon, um, where it may not as much as Google and Meta. I mean, it's still going to affect it. So when spending starts drying up, I know consumers have been spending so much that they're in all-time high debts, ladies and gentlemen. At some point, these people got to start focusing on paying off their debt and putting their money to work and stop spending it all on dumb crap. And you may see the market take a hit once the earnings start showing that. But right now, we still got a lot of earnings coming out, so we'll find out. But I'm just kind of sitting cash. We'll shoot another video out this weekend to go over our long-term account, not our long-term account, but our transparent account, and see where we sit on that. But I'm waiting for the market to pull back, besides a couple other stocks. Well, let's jump into some scans real quick and switch layouts. So right now I got the high cap. Now this is a scan of all just the bullish stocks filtered by the PE over 0. I definitely want to make sure the company's making money. This is bullish oversold. We'll go with some of the biggest. Let's look at some of the biggest weekly losers. Or should we do year to date? Let's do the biggest year to date losers. Basically, there's 83 of them, ladies and gentlemen. We're not going to get through them all. We'll probably scan through some names that we know. You could take a screenshot, come back, kind of go through them all yourself. But Coin has had a 30% pullback so far this year. It's oversold. Stock chart coming up is bullish. It's got some ways to run if it might hit back to current levels, but it's been oversold for a few days. So if you enter back then, make sure you average your position down. I'd probably every 5% or so. That's why you never go all in on a position. You just locking yourself into hoping it goes right up. You want to be able to manage that position. But I mean, it could have a 50% swing just up to its previous high prior. Don't know anything really fundamental what's going on there, but dig into fundamentals always. If you ain't got a good 10-year outlook on the stock or the company or the market, I wouldn't even trade it. Otherwise, you just get too much in your emotions. Carvana, I believe this was one of the biggest winners last year. We looked at the end of the year. We did a video on the biggest winners. I mean, this thing I think closed up like 600% last year. Something crazy like that. It's had 20% pullback this year. Could pull back more, but who knows? But even then, once again, look at that 200-day moving average, man. Ladies and gentlemen, save you from a lot of losses. Anyway, it has crossed back up over the 200. And, I mean, it could grind back up to some, it's got a lot of room to run if it ever hit back up to the previous highs, or it could come back down to the $10 range. Make sure the company's making money, which I don't think they are. Price to book is 23. Their PE trailing is -14. Double checking on your brokerage, but I'd be out. I can filter this to the PE real quick, but I'm not going to do that. Just kind of check your brokerage. Square, Affirm. We're going to pop through some of these quick just to kind of get you. We ain't sitting here watching all day. AMT. Just kind of scrolling through my eyes, looking for some names, kind of tickers that stick out. PSA. That's a RIT. There's a RIT in here. Tell you what, ladies and gentlemen, I'm going to scroll down slowly. Personally wouldn't touch that right now. All right. Let's see. MEGen, I don't know. Looks like a buyout there. Duke coming up. Ladies and gentlemen, really right now, I'm kind of waiting for the overall market to pull back. So there's going to be a ton of other tickers that pop up on here. I don't know what's going on with race. It's not wanting to show up. Hopefully it's not going to happen. I don't know what's going on with TC2000 right now, but man, it just brought us to an end. Yeah, ladies and gentlemen, I think we're going to go ahead and close out. Hopefully you took a screenshot. I don't know why TC2000 is giving me some technical difficulties, but we are out, ladies and gentlemen.